Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
When it comes to crypto regulation, there's a lot happening around the globe. I mean, in UK we have consultation paper out, then EU has MiCA, and on the other hand, President Biden has also signed executive orders in the past, and India can definitely pick some hints, and that is what we're going to discuss with our guests in today's episode. This is Coffee and Crypto. I'm Arun Singh, a very warm welcome. We'll start the show with big stories of the week. Ethereum's 10th shadow of fork or a test is live. Ethereum is continuously running tests ahead of the merge. We explained its shift from mainnet to beacon chain in one of the previous episodes as well, which is being called the merge. This will shift the network from using the energy-intensive proof of work protocol to proof of stake. They'll continue to run mainnet shadow forks until the merge. Moving on to the next story, for the second consecutive month, the Federal Reserve raised US interest rates by 0.75%. This as an effort to combat inflation. This follows a similar hike in June and could keep pressure on markets, including cryptocurrencies like Bitcoin, Ethereum, etc. Moving on to the next story, while investing heavily on Metaverse, Facebook's parent company Meta Platforms Inc. has issued a gloomy forecast after recording its first ever quarterly drop in revenue. Its Reality Labs unit, responsible for developing metaverse-oriented technology like the VR headsets, reported sales of $452 million, down from $695 million in the first quarter. Moving on to the last story, as per sources quoted by Reuters, a key regulatory panel in the US House will delay consideration of a stablecoin regulation bill for several weeks. Part of the delay is due to changes sought by the US Treasury Department, which generally supports the bill but wanted stricter consumer protections tied to wallets where people would hold their digital assets. Now, what is happening in the other parts of the world when it comes to crypto regulation? Let's give you an explainer on our coffee wall. Let's go. So major countries around the world are talking about regulating the cryptocurrency, and many legislations are already in the pipeline. So we thought we'll give you a roundup of what is happening around the world when it comes to regulation and what can India learn and pick, which becomes our topic of discussion with the guest. But let's begin with European Union. On 30th of June, the European Parliament agreed upon a new law to regulate cryptocurrencies, the Markets in Crypto Assets Law, that's MiCA. With this, EU will bring crypto assets issuers, and crypto asset service providers under a regulatory framework for the first time. Remember, the bill's still not law. The main features of the law have been agreed to in principle by lead negotiators, but they have yet to publish a full text. Once the text is available, governments and lawmakers at the European Parliament will have to make sure the demands were met. That will happen through a series of votes, and under the new rules, stablecoins like Tether and Circle's USDC will be required to maintain ample reserves to meet redemption requests in the event of mass withdrawals. Now, UK. A consultation paper is published this Thursday, and the UK Law Commission, a statutory independent body tasked with reviewing and updating the law, wants to extend the country's property rules to cover crypto and non-fungible tokens, and several enthusiasts are happy about it. The Commission steers clear of cryptocurrencies that function simply as means of payment. Remember, here in India as well, a lot of investors and enthusiasts have also been pointing out similar sort of point that, we don't want it as a mean of payment, but classify it as an asset class. But now, coming back to this story, it focuses on working on the trade value of the digital assets. So UK Law Commission sees crypto as a new type of property. Parliamentarians in UK are also planning to introduce rules for using stable coins. The rules are part of a long-awaited financial services and markets bill, which is aimed at strengthening the UK financial system post-Brexit. So there's no blanket ban on cryptocurrencies in the UK, but it also doesn't have a financial regulatory regime for crypto assets just yet. In May 2022, when Terra USD crashed, Bank of England published a consultation paper that outlines a strategy to reduce risks for investors holding stable coins. Now let's move on to Singapore now. Singapore is considered to be a crypto-friendly nation, but remember Three Arrows Capital, a crypto hedge fund company which recently collapsed, and ZipMex, an exchange that halted withdrawals, are all Singapore-based. Singapore wants to tighten laws for crypto players in the country. The Central Bank of Singapore and the Monetary Authority of Singapore, which is MAS, have planned to come up with a new set of regulations for Bitcoin, other cryptocurrencies and digital assets. These will take enforcement action if any entity is found to be conducting illegal activities. The Central Bank of Singapore will also release plans to make the country a hub for Bitcoin and other digital assets. In the end, we'll talk about the USA. In March 2022, President Biden issued an executive order calling on the government to examine the risks and benefits of crypto assets. Major focus of this executive order was to prohibit illegal crypto activity. As a result of this order, the US Treasury Department recently published a fact sheet outlining how it could work with foreign regulators to address the cryptocurrency sector. However, legislation being drafted by Democratic and Republican leaders of the US House Financial Services Committee will not be considered by the panel until September, and this is what Reuters sources have confirmed, and I also told you this in today's big stories as well. So consideration of a stablecoin regulation bill is delayed for several weeks. So we'll now get into a discussion which we have our guests with us. We have Preeti Khurana and Ajit Khurana. Preeti Khurana is Director of Advocacy and Regulation Clear. Ajit Khurana, founder of Reflexical. A very warm welcome to both of you. Mr. Ajit Khurana, I would begin with you. You know, you've heard all these countries doing several different things. What can we pick as a nation, as India is also on a similar path?
So as a nation, we have to decide the country's priorities. We have a law called FEMA, which governs how currency is moved abroad. So to try to mimic a country like Singapore or USA, which actually has relatively free flow of its currency across its border, will not work for us. I think the easiest thing, given that we have so many constituents who are not necessarily working in conjunction with each other, is to do two parts. Number one, recognize this and classify it. I think the best example is from MICA. Instead of classifying into 5, 10, 15 types, non-fungible, fungible, they said basically utility token, money-like token, that is e-money token, and asset-linked token. Simply this. Frankly, I think this is beautiful. All clarification comes in. Second thing to do is that instead of waiting for an almighty law to come which the parliament will enact, let us look at the existing laws such as the RBI Act, SEBI Act, PMLA, FEMA, and other such. Maybe Income Tax Act has already been done, and just get them to recognize the existence of crypto. Once you do this, we are on the path to being at par with some of the best regulations around the world.
Sure. And Preeti, you know, we've of course listed all these regulations which are in a process in other countries. Are there any India-specific regulations, as few have been pointed by Mr. Khurana here, are there any India-specific regulations that you think we immediately need to work on?
So even though, you know, now the Income Tax Act has a mention of virtual digital assets, yet it's not clear enough. So, you know, firstly, there has been a lot of confusion whether this gives it legal standing or not. I think all of that needs to be sorted. RBI's discussion paper, which is, you know, being talked about, it's not there yet. Essentially, whatever law they've put together, it is, you know, it has several gray areas. So I think on an immediate basis, perhaps in the current financial year, they need to clarify a lot of things, precisely in the sense of how to estimate the cost of acquisition, for example. So it's not very clear what exactly constitutes cost of acquisition, what all could be included, and let's not wait for, you know, things to go to courts and then, you know, wait for jurisprudence and all of these things to come through for us to develop an understanding of what these things are. Then essentially, if you look at the US and UK laws so far, they've decided to treat these as capital assets. So there is capital gains, there's benefit of setting off losses. So, you know, things have been made super simple and they've been clarified precisely in the law. I think that's the first thing. So I'm hoping in the next budget, which is not so far away, they would have started preparation. So it would be a good idea to, look at all of these gray areas.
I was just going to ask you, what can we pick from these countries? Of course, you mentioned one thing, which is capital gains, how these countries are also counting it under capital gains. If there's any other point you think that we can pick from other countries and which can suit our needs here as well.
Yeah, absolutely. So all the laws that we've drafted so far are more out of suspicion and fear rather than any kind of prudence. So the first thing is to sort of, consider whether these can be reported as capital gains. We spoke about that. And then to talk about loss set-off, because, essentially with TDS regulations, with no loss set-off, like a very small bracket which is available, you're literally, you're forcing people, developers, exchanges to actually move outside India.
Yeah.
So I think all of these need to be looked at, and essentially on GST. So, people are concerned whether GST is going to come through. There have been talks about what rate to apply. It could be 18%, it could be 28%. And then there's so much confusion around when is it coming and how is it going to impact us. So I think all of that clarity needs to emerge. And now that they've said that, you can calculate, exchanges have to do these complicated compliance, they need to convert into primary VDAs, but, you may not have enough data around all of this. I mean, in the sense that we are now so tech savvy, we've seen how digital payments evolved because there was so much better regulation.
Right.
So instead of fear, if they decide to look at prudence, so they've picked up a lot of our tax laws from the UK law itself, which is actually far more clearer. The definitions are spelled out in a much better fashion. I think it sort of needs a relook, and I'm hoping in the next 6 months something comes through.
Ajit, I mean, we've listed different countries here. Which country would you think is the most crypto friendly?
So it has changed. It was Estonia, it was Malta. For a very short period, it became Singapore. Today, amongst the major nations, so I'm not looking at the financial havens like British Virgin Islands, etc. But I think amongst the major nations today, it is probably the United Arab Emirates.
And that's why we see the brain drain also happening, and a lot of Indian exchanges especially leaving the country and then going to the UAE.
That is not entirely correct. What has happened is these exchanges were never incorporated in India. The brain drain you are referring to is happening, but it is just the residence relocation of the founders of these exchanges. These exchanges were never registered in India to begin with.
Oh, like that. Yeah, sure. But these are Indian exchanges, and they are making Dubai as their base. And if we had a regulation here, of course, they would have been settled here. Would you agree?
Absolutely. Yes, I agree. In fact, I think that other than your theme, which is which countries can India learn from, India should also learn from India. Namely, classify this at anything, let's say an asset, and then learn how you are regulating other assets in India and apply the same rules here. I think that is a great easy point to start.
And when we look at Singapore, you think they've learned the lesson tough way, because of course they were also very crypto friendly, but then all of these protocols failing, and then now they are thinking to redo it a bit. Do you think they've learned the lesson tough way, and probably we have some lesson to learn from that story?
Interestingly, I have spent time in Singapore, a couple of years as CEO of a crypto exchange in Singapore, and I must say that Singapore's priorities are a little different. So they are not worried about dollarization, which RBI is worried about. They are also not worried about tax evasion. Their primary concern turned out to be consumer protection. There was a point of time when things went out of hand, and every taxi, every bus stop, every bus in Singapore would have an ad of some crypto provider. And this created a lot of hue and cry, because it was felt that you would be preying on the innocence of the gullible investors, and that is where they cracked down and said you just can't do any of these things. So sure, consumer protection remains a very big issue even for India, but India has other big issues such as tax evasion, capital flight, etc. So we can't learn from Singapore because they had to take an extreme action for consumer protection.
Okay, last quick question from Preeti here. I ask this from a lot of guests, and every time we discuss regulation, and I'm sorry to ask it from you here, when do we expect a regulation? When is it coming? And if yes, and what is the procedure which is left to be done yet?
Yeah, I think again, I would say government is moving with a lot of fear and suspicion. So, when they talk about global cooperation, I think that's a long time coming. There will be cooperation at some point. There will be mutual understanding. There will be ability to, sort of look at tax policies across all of these countries where there is high trading activity. So all of that will emerge. But it's very, very important right now, I feel, for the RBI to come out with, what exactly it thinks about cryptocurrencies, and for tax authorities. Okay, and for the tax authorities to actually clarify, all of these grey sections, understanding of, various aspects of TDS, looking at costs of acquisition, what all costs one can set off, and of course on the loss set off bit. I think these 2 or 3 things, once there is more clarity, once, these are sort of understood from a taxpayer perspective, then things could really improve. And GST, hopefully GST should, could take longer because there are other important burning issues with respect to GST. But in terms of income taxes, I'm hoping in the next 6 months something should really come out.
And as you mentioned, the RBI stance, Finance Minister Nirmala Sitharaman also mentioned it in the Parliament, where she said that they want a complete ban. So that's the kind of, strong criticism that we hear when it comes to RBI. But of course, government stance is yet to be revealed. We are yet to see where it is headed. But thank you so very much for discussing all of this and answering all our questions. Now it's time for us to take a very short break. But after the break, we are coming up with MCQ. That's My Crypto Queries, where your queries will be answered by our expert Srijan Bhardwaj. Joins us after the break. Don't go anywhere. Hi, you're watching Coffee and Crypto. I'm Arun Singh, and now it's time for MCQ. That's My Crypto Queries, where your crypto queries are answered by an expert. We have with us Srijan Bhardwaj, serial entrepreneur. Very warm welcome, Srijan. We have Aditya's questions right up at top. When will Shiba Inu's rate will increase?
It's a really important question because a lot of people have this question. But honestly, I don't have a crystal ball. And you have to understand that Shiba Inu is a meme coin. Meme coins have had their trend that was primarily influenced by Dogecoin, which was popularized a lot by Elon Musk. Now, it could be a black swan event, like a one-time occurrence that just happened, or maybe it could happen in the future. But I have very limited expectations of Shiba Inu's price going up, not at least until the next couple of years.
Okay, Shaviz is asking, Pi Network, real or fake?
I would say Pi Network, as from my understanding, is not entirely fake, but it's not entirely real. Because
and I would also like you to give a little introduction about Pi Network. Of course, they're popular for the mobile mining thing. If you can give a brief introduction to them.
Yeah. So Pi Network, like you said, is a popular cryptocurrency. What they say is that you can mine our cryptocurrency from your mobile. So instead of mining through your laptop or your computer, you can mine it through your mobile, and it uses a lot of affiliate marketing and multi-level marketing, which means I get referral bonus as well. Now, the thing is that Pi Network has been existing since the last couple of years, and people have been accumulating a lot of Pi coins from mining, but the cryptocurrency has not yet been launched on any exchange. From my understanding, if 1 million people have already accumulated a lot of Pi coins, as soon as it goes up, people are going to dump because people have legit invested their hard-earned money, and it uses a lot of computing power of your mobile device as well.
So you see it with suspicion?
Yeah, I see it as extremely risky and something I would never do because 1, it's not live yet. 2, I would not want to accumulate of something that is not live yet and which already has a lot of built-in sell pressure.
Sure. The next question, how is a graphic card related to crypto mining?
So initially, when we were having the mining part of crypto, we were simply able to use it with any regular computer. But later on, as the mining became more and more difficult, we had to bring in graphic cards and GPUs because they have more cores as compared to a regular CPU. And this is why graphic cards became popular, because they can be used for computing the hash and solving these complex mathematical puzzles. And at the same time, they can be used to process all this huge amount of calculations that have to be done in a short span of time.
Sahila is asking, why is India lacking behind in blockchain research? And my subsequent question to that would be, would you agree? And if yes, then of course answer his question.
I would agree. I would say it's three-way. One, the Indian people think of crypto as a get-rich-quick scheme. We have to first understand that it's not a get-rich-quick scheme. It's like a technology, just like any other technology. So it will have its own diffusion of innovation, which means it will have its own S-curve for any technology that comes. Secondly, India is not able to get good research because the government has not been very clear on the crypto laws yet. The government has taxed crypto, but the framework or any kind of law policy is not clear. So a lot of people who want to start research are held back by this because they don't want to invest their time and effort into something which tomorrow might get banned. And thirdly, it's because somewhere we seek a lot of security before diving into something. We want the confirmation from the West world, and then we tend to pick up something. So I think in that sense, we are a little bit behind, because now slowly we are seeing Westerners going for the research, going for all of these jobs and all the academians. So we might pick it up in a couple of years.
Okay, next question. Should one buy the dip right now?
So there is never a perfect time to buy the dip. You know, if you buy the dip will keep dipping. At least that's from my experience. So I would say it's good that you can dollar cost average. And I personally prefer to create buy zones. So for example, if I have a firm belief in Bitcoin, say for example, under $25,000 is my buy range. So every single day or every single week, I would put in small money to buy Bitcoin. And this is how I would dollar cost average. I would spread out that money throughout the year so that I don't run out of my capital. And at the same time, I can guess the best price of the week.
Sure. Last question. Does cryptocurrency offer anything for the middle class?
Yeah, I think cryptocurrency offers three major things for the middle class. One, it offers the education. Because of cryptocurrencies, a lot of people have started taking interest in finance. So a lot of people have started understanding how money works, and they have started educating themselves about different instruments of finance as well. So education is the first. Secondly is the jobs that it is creating, the startups it is creating, the freelancers coming in. So it's a huge industry that is booming. And third, it gives people a lot of entertainment. So I think of cryptocurrency as, you know, if you remember the famous dialogue, entertainment, entertainment, entertainment. So even if the first two E's are not being met, it has the entertainment for sure.
Sure. Thank you so very much, Srijan, for talking to us. And now we'll move on to our last segment, which is again a conversation, and it's about zero-fee trading. So I read about this, that CoinSwitch has come up with zero-fee trading, and I was really curious to know what exactly it is. And for that, we have someone from CoinSwitch. We have Parth Chaturvedi with us, lead crypto ecosystem at CoinSwitch. A very warm welcome, Parth. What is zero-fee trading is what I would want to understand right in the beginning.
Thank you, Arun, for having me. So what we've done is basically have a monsoon bonanza of sorts for our users. So we are offering zero commissions for all trades on Bitcoin during the festival period. This zero fee will be applicable across different order types that are available on the platform, like instant orders or limit orders or even SIPs. Basically, we want people to trade and invest in Bitcoin during these times of fear, uncertainty, and
what's the term of this offer? What's the term of this offer?
It's called zero trading fee, like zero festival.
No, I meant the time span of it. I mean, what are the months you're running it in? There must be a time period to it.
So as of now, we haven't decided on the end time. It is on for now. We will, depending on how it proceeds, we will decide on deciding the end time.
And why only Bitcoin?
So Bitcoin is sort of like a bellwether asset for the entire cryptocurrency market, and basically it has almost 40% of market cap, more or less. And that's why we want to reach this. We want it to be able to reach to the maximum amount of user base. And a lot of user base holds Bitcoin.
And if I may ask, what is CoinSwitch trying to achieve with this?
So as you all know, there have been a lot of setbacks to the industries, particularly in India. Globally, we are seeing a sell-off in risk-on assets, and crypto has also fallen off a lot. Particular to India, there has been a fall in volume after the TDS impact, and we wanted to pass on some of the relief to our users. So TDS impact of every sell order will probably feel a little less painful now. The zero trading fee will ensure easy entry and exit orders for our users.
Great. Thank you so very much, Parth, for talking to us on this, and all the best. Because every time, you hear zero fee, of course, your eyes shine and pop out as well. That's what happened with me. So I really wanted to understand what it really entails. Thank you so very much.
If you were on the sidelines waiting to buy Bitcoin, now's the time.
Okay. We hear you. Thank you so very much, Parth. So with this, we've come to an end of this show, but we'll be back next Friday at 6:30 p.m. I'm Arun Singh. It's goodbye from my side. Bye.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.